Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, November 24th. Okay, guys, let's get started. What I'm going to do this morning is something a little bit different. I'm going to, of course, run through SPY and then the rest of the indexes along with the FANG names, but then I'm going to cut the video short and do a wrap on that, and then I want to dive into a follow-up video where we can do a deeper dive on some specific names, maybe go over some of our positions and some emerging sectors, maybe a follow-up to some of the things that we talked about over the weekend, just to break it up, because I know some people don't want to watch a lengthy video ahead of the market. You can digest that on your own time. And also a note to viewers, especially if you're new, I'm going to be taking the rest of the week off, at least officially. I'll probably pop in here and there, but I'm going to be heading down to Florida for the balance of the week to spend Thanksgiving with my folks. Now, that's on the down low, guys. I know we're supposed to cancel Thanksgiving, so I don't want you guys to let that out of the bag. That I'm going to be, breaking the rules, having Thanksgiving dinner with my folks. So please don't get me in trouble. So let's get into SPY. We're trapped in this box here, oscillating along the midpoint line of the trading range at 357. Really, from this vantage point, nothing much has changed since yesterday. I think anything above 357, you can be bullish. Prices below 357 favor lower prices. Now, it's 7:15 as I'm starting this video, and just a quick look at futures. Small cap futures are up 1.37%. SPY futures are up 0.75%. And QQQ futures are up 0.35% as of 7:15. So the trend that's been emerging is small cap outperformance, followed by SPY, with the Qs lagging. So for SPY here, we're looking to open higher around this 360 level. And what we would need is a pop above 362, and then of course 364 to go into blue sky country. But you'll notice that this 362 has been an area of resistance. So if you carried any SPY long exposure overnight and you get up towards 362 this morning, I would be looking to do one of either two things. Either roll higher on your strikes and stay long, move up your stops, or try to gauge these candles once they approach 362, and if you get any sense of a fade, take an objective short against 362 with a stop just above. That'll just be on feel. If you get this kind of action, a stall at 362, then you may want to just book your profits, and then you can decide if you want to play to the short side or not. But that looks to be like an important level. Here it is on the 30-minute chart. You can see here that we've been oscillating around this 357. There's some intermediate levels here, like at 358 was a distinct level with multiple reaction points. So I think that's an important level. And then up here at 360.25, we've got a large volume over price bar. You may see some resistance there this morning, and then your upper level is 362. Notice that PPO is still below the zero line. That may cross here this morning with the bump in futures, but still momentum rather on the weak side. Did get a breakout on RSI, moving above 50, so maybe a little buying pressure under the surface. But here are your levels, and I feel real confident about those. So let's talk about the scenario where you're not in and you're trying to actively trade this. We'll open up here towards 360. That will leave a gap below. Be ready for the gap fill lower. So if you get a move lower that pulls back in to 358 or a complete fill back to 357.50 where we closed last night, watch the reaction there and then take your objective long. What would change my mind is a break below 357. That means they would have faded the whole opening move and moved back below on the bottom half of the box. If I were, if you got that gap fill down to 357.50 and then that failed to hold and you moved below 357, you've got to get out of your long and then flip short for a potential move down here. Not expecting that, just laying it out there as a scenario. Now let's look at the other scenario. We gap higher, we don't fill, we don't go back, but we move above 360.25. I think you can be long there with your stop just below and then see if you get a push up to 362 and then potentially higher. Qs, nothing. Basically unchanged yesterday. There was a nice intraday trading op. We'll show that on a 30-minute chart. But we've been trapped between 293 and 290, and we remain inside this little $3 box. Same exact setup as yesterday. Below 290, I would be leaning short. Above 290, you can be long and look for a move back up to the top of the box at 293. But this is not, QQQs is not where the action is at. I mean, you may be able to get intraday trading ops for sure, but the interest and the money is flowing towards small caps, the cyclical trade, the value trade, and those predominate in IWM and SPY. So while anything's possible, I don't expect some kind of big bull run in the Qs heading into Thanksgiving. If anything, it may dribble lower. Here's the 30-minute chart. Here was the nice trading op that I was talking about yesterday. We gapped higher and made a reach up to 293. You can see the wick on this candle, and that was a well-defined line of resistance where it would have been very objective to say, okay, top of the range, objective short with a stop just above, and if you did that, you got a really nice move. You got a quick $3 move to the bottom of the box at 290. Then you got a follow-up breakdown down to 288 before it found support and then reversed back up. Now, I did not catch that as I just described. I got short on the break, on the move below the open. So wherever the open was, I was watching that, and then when it went red, I got short in here with 290. I think it was, I'll have to check my notes. It was either 292s or 291s, but then got a nice move down. I closed at the bottom of this candle, and then tried a 289 down here, made a little bit, and then it reversed. But what this looks like to me is breakdown, back test, and then, you know, possible breakdown again. So I think, you know, if you're looking for a pivot today, I think it's 290. I think it's the same exact thing as yesterday. IWM, been the leader of the pack, gap up, never looked back, and finished near the highs, up about 2%. Notice we got a little bull cross working here. If you were to see a pullback back into this gap, or even to fill this gap back to 177.63, I think that would be a great place to try a long. I think up here at the top of the range, if you want to, you know, try something long, you've got to set a tight stop just below yesterday's close, and then, you know, have that be your line in the sand. But in general, I don't like taking these trades that are out in space with nothing to shoot against. If you follow my work for any amount of time, that won't be new information for you. So here it is on an exploded scale. I drew in little wedge here. Here's that line from the prior highs. If you got a pullback in to this wedge support right here at about 179.50, I think you could try that long. And then, as we talked about, if you got this gap fill or even a move back down in here, I think IWM has some tailwinds, and I would be looking for objective places to get long on a pullback on IWM. Facebook. Well, let's just talk about FANG in general. Aside from Tesla, money is coming out of this sector. Okay, that doesn't mean it's, you know, going to crater, but it does mean trading is going to be really soggy or dribbling lower at a minimum. What I want you to do, especially if these names have been a gravy train for you in the past, okay, you know, either active intraday trading where you can just basically take your shots long and they always pay off, or if you've been a more swing position trader where you've been long and they always print money for you. Short term here, reorient yourself. The bias now is neutral to lower, and you can see that in the charts. Facebook, bearish RSI, bearish PPO, bearish price action. Yesterday, we talked about 270 being our pivot. Made a reach higher to 273.50, then it let go. I had a really nice trade on this to the short side. Worked out great. Now, looking at price action, this to me looks like a fail back test of 270 with a rejection and a potential fail. So for me today, 270 is the pivot. I'm not going to get bullish until price takes out 273.50. That was the midpoint of this trading range. And bigger picture, this looks like an H sell setup, which is here's the leg of the H, and then here's the hump of the H, and that would execute on a breakdown below 266. Apple off 3% yesterday in an up market. That should tell you everything you need to know about what's going on in this FANG market segment. We had talked about 118 as being our pivot. Got a beautiful breakdown. Got a really nice move. I was in this trade. It was great. I took profits down here towards 115, and then on this bounce I reinitiated. So I am in. I carried over 115 puts for Friday, just to see if there might be some follow through this morning. So I'll decide whether I want to, just close that out if it pops above, or hang on a little bit to see if there's follow through down towards 113 or 112 with this gap down to 110. But you can tell pretty weak price action. The big standout's been Tesla. It gapped higher above the all-time high at 502.50. If you were Johnny on the spot and bought that opening candle with your stop just below 502.50, you got a great push and follow through. Great trade. Kudos to you if you got that. If you're trying to play this today, what you're going to need to do is set yourself a stop. Maybe at the top of this first big candle, about 518, something like that, or at the bottom of this little cluster. Use that as your stop, and then see if you can get a push higher. But if you're more the patient type, any move back to 502.50 that holds would be a really nice long. Or if you get a gap fill down to 489 that holds, that also would be a nice objective level to try a long in Tesla. It's really been hopping lately. Microsoft, bearish RSI, bearish PPO, descending triangle, bearish. Yesterday, beautiful intraday trading op. I got this one. I was very happy with it. Didn't catch it perfect, but you don't have to catch it perfect. You just have to be right in terms of direction. Got an opening push right up to the downtrend line and right up to 212.50. The high was 212.30 right here, and that was your objective short. I caught it a little later, but got this move down to 209 where I covered. Now there's a little bounce. You can use your downtrend line as your go, no go. If you break out, you may get a move back to 212.50, but you also may get a rejection right here. And even if you didn't want to mess with it up here, you've got a $3 gap below 209. I would certainly have an alarm there if Microsoft at any point in time over the next few days were to break below 209. I think you're going to get a fast $3 move down to 206 and then possibly 204. Amazon, bearish RSI, bearish PPO. I hope you're getting the drift. I hope you're getting the feel that this isn't where it's at to be, trying to set up for a big long. I think it's too early. I think money is still coming out. You've got this consolidation block here between 3150 and 3050 with your midpoint at 3100. If you're an active trader and price is holding 3100, sure, you can try a long and try and get a $50 move up to 3150. Or if price breaks below 3100 and you want to try for 3050, knock yourself out. But I think the real move will be on a move outside of this consolidation box, either above 3150 or below 3050 for a more sustained move. But you can certainly make money on a an intraday basis if you're sharp and you're comfortable with Amazon. Google. We talked about this 1720. We came down. We breached it yesterday down to 1710. And to be honest with you, I thought this was gone. On that break of 720, I thought it was going to come down to at least test the top of the gap. That didn't happen. It bounced, recovered. I would still key off of 1720 today. As long as it holds, there's an opportunity to move back up towards the top of the box. But on a move back below, I think you'll find that 1710 does not hold next time, and I think you at least come back here to 1700. Note RSI, bearish, PPO, bearish, price action, bearish. So trade it as you see fit, but very weak. Netflix, bearish RSI, bearish PPO, consolidating price action. So although the indicators are in their bearish regimes, we haven't really seen the true breakdown yet. Now, I thought this move yesterday was pretty interesting. I'd have to look back on a shorter term time frame, but I think this headed south right from the get-go. And if you were trading it, your break back below this 487.50, you can see where it opened right here. That was your objective short on a break back below this well-defined line. We had a move up here to 494 that failed. Once it broke back below this level, found the bottom of the box, we just recycled that move. We made a move back up to 494, came back, broke the bottom of this box, found the bottom of the range again. So it's real simple today. It's got to hold yesterday's close right here at 477.50. If it can do that, you may see a move back up to the top of the box. But if it breaks, I think it favors another test of 465. So that's it for FANG. Let's do a quick recap. Small caps are leading. Cyclicals and value, energy, banks, industrials, leisure and travel are all doing well, along with fintech, Square, PayPal. EV space is red hot. Solar space is perking back up again. So those are some areas where you can look for long ideas. By all means, you can get good intraday trades on the FANG names. But in general, I would be neutral to bearish on those names. I don't think this is the place to try and be a hero going long on those names, aside from Tesla, which is its own animal right at the moment. So there will be a spot to jump back in, on a longer term swing basis on the FANG names. I just don't think it's right now. And I think the task for you traders out there that have made an absolute killing on FANG, since March, recalibrate. Look to the different sectors, because if you just blindly go long on these FANG names, I think you're going to either get a bunch of paper cuts because you continually get stopped out, or those calls will just decay because I don't see the upward movement. Now that could all change, the day after Thanksgiving. We don't know, but a good tell for you on the 60-minute charts are when PPO breaks above 0, when RSI breaks above 50, and you see price break downtrend resistance. That would be a time where the odds would be in your favor for getting long some names on swing trades on the FANG names. Okay, I'm going to wrap it up here. If you're new to the channel and you like what you've heard, please subscribe and hit the alarm bell. That way you'll get notified of all my new content each and every day. Look over in the show notes for convenient links to the blog site, where you'll find a lot of interesting and helpful articles, trading psychology and trade school tips and tricks, along with a place to register for my content that comes with some nice bonuses, like an email right to your inbox on all my new content and an invite to our trading room. We've got some really nice little things going on in the room. A lot of guys with some sharp ideas and a great place to expand your trading network. If that sounds interesting to you, we'd love to have you. Look forward to another video here in the early morning as I look out to find some fresh names for potential trade ideas going forward. And one last note before I close. Heading into the long weekend, again, we've got a short session on Friday, half-day session. Take a look at your overall exposure and just kind of fine-tune it between now and tomorrow at the close on how much you want to have out there for what amounts to a 4-day weekend. Regardless of whether you're spending time with family, it's a good time to relax and recharge. Do so with an overall exposure level that you're simply comfortable with. Set it at a level where you won't be biting your fingernails over a nice long weekend. You want to be comfortable. You want to be able to relax. The market will be there Monday when we all get back. So just think about that. I don't think there's some massive risk looming, but a 4-day weekend is a 4-day weekend. And whenever you extend the amount of days, the markets are inactive, the chances of, some Sunday night futures move is elevated. I mean, that just stands to reason. So set things at a comfortable level. You may be able to accomplish that with a hedge in the next week if you've got a lot of long exposure and you don't want to peel those back. Set yourself or get yourself a hedge, cheap insurance policy for next week. That may be a way to handle it. Okay, let's wrap it up here. Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you soon.